I want to thank Microsol Resources for inviting me to participate in this series of webinars. It's very exciting to be able to bring this data to the industry, and we really appreciate their support of those efforts. So we've already covered my background. So, but I do want to briefly make sure everyone is familiar with the company that I'm from. Hopefully you all are familiar with Dodge through the Dodge Reports. That is part of our Dodge Global Network. It is the most comprehensive information on construction available for the U.S. And we also have our Suites.com division that is the leading source of information about building products. But the division that I'm part of is the analytics division. We take the data that is accumulated and the context, the rich contact information that is accumulated from the decades upon decades of Dodge reports that we have available to us. And one of the members of my department is Bob Murray, whose forecast, of course, in construction is famous. We also do off-the-shelf and custom analytics. What I do is a little bit different, though. I deal with market research on critical trends that really describe the way that the construction industry is in a state of transformation right now. And we find those trends to fall into three large buckets. We've been doing reports since 2006 on sustainability. We take that market research that we do, and we do SmartMarket reports that include a thorough analysis of the data provided by the study. They also typically include case studies, thought leader interviews, articles that explain key areas of interest around this. So they're a pretty rich form of information on these topics. And like I said, we've been doing sustainability since 2006. We've also been doing reports on technology and innovation, including a really deep series on building information modeling that has also been going on since 2006. We've looked at BIM in various countries around the world. We've looked at how to measure the results, understand its impact, and we've also done studies on information mobility. And then finally, we also have done a great deal of reports on practices and processes, including our seminal report on managing uncertainty, which really looked at the core problems that are troubling design and construction and create uncertainty on projects. We had a recent report on building a safety culture. So those are the three big buckets that our reports fall into, but I do want to emphasize before I move on that we don't see these as three separate silos of information. We see each of these as deeply interconnected. So sustainability relies on the technology innovations to be able to achieve its results. And certainly sustainability fundamentally depends to get the best results on having integrated processes. So those evolutions in practices and processes are really fundamental to success in sustainability goals. And you can take any one of the other two and do the same kind of combination. They are all deeply interwoven, and they all, again, speak to the way that the construction industry is transforming in fascinating ways. So what are we going to talk about today? Most of my talk is going to be spent on the world green building trends. And first I'm going to provide you with a quick overview of general trends, general global trends that we've been able to observe. But then to me, the real interest and value in the research that we've done is in the countries and the regions that it highlights, really understanding what the green priorities are in each of these places. So we'll be looking at the Americas, specifically at 4 countries, U.S., Mexico, Brazil, and Colombia. We'll be looking at findings from Europe, again, specifically Germany, Poland, and the UK. And we'll be looking at findings from China, India, and Singapore. And then finally, I'm going to spend a few minutes at the very end talking about another study that we did that I also think is very relevant if you want to think about where things are trending globally. It's the Greening of Corporate America series that we've done with Siemens, the latest one that we just published about a month ago. And the reason I think this is so important is that, of course, when you're looking at the largest companies in corporate America, you're looking at the people that are really creating sustainability markets around the globe. And that obviously has a huge impact on green building globally. So I do want to give you a sense of what those findings reveal as well. But as I said, the major focus of today's talk is going to be on the World Green Building Trends 2016 study. And before I go any further, I do want to thank our partners. Our premier partner on this study, without whom we would never have been able to produce it, it was United Technologies. And in addition to that, we received critical support from Saint-Gobain, from the U.S. Green Building Council, and from the Regenerative Network. So, we do rely on the partners that we bring in to help us fund the research to bring this valuable information, and we want everyone to be aware of their leadership in these areas. All right. So when it comes to the methodology of this study, this is the third time we've conducted the World Green Building Trends study. The first time was in 2009, the second was in 2012, and this study, while published in the beginning of 2016, was actually conducted in 2015. And we are already laying the groundwork to look at a new study for 2018. So we're hoping to continue this and the important revelations that it has about the marketplace. So I would welcome your feedback, anyone who has any feedback at the end of this, because we're always looking for ways to improve. One of the major differences we had between 2012 and the 2015 study is that we actually had a much larger participation. We had more than 1,000 study participants this time across 69 countries. This was a 25% increase in sample size. The sample was also very different. When we conducted the study in 2012, the sample was largely drawn from members of green building councils. In a lot of regions of the world, sustainability was still relatively new. To get an informed feedback, it made sense to work largely through the GBCs. But this time, we were able to so GBCs accounted for 75% in 2012 of the total survey respondents. This time, they only accounted for 25% of the total survey respondents. And we think it's very interesting when we get to the green benefits that this is now no longer drawn from a largely green-oriented sample. So I do want to make that point right from the start. We did talk to a wide range of practitioners in the industry, including architects, engineers, contractors, owners, and specialists and consultants. So let's dive into the findings now. The most striking finding is that we're still seeing a high level of growth. And the way that we really track growth, we asked each of the participants to describe how much green building they're doing now, whether they're doing 1 to 15%, 16 to 30%, 30 to 60%, or more than 60%. And then we asked them, well, in 3 years, how much green building do you anticipate doing? And you can see that among those who said they're doing more than 60% green projects, right now is 18%. But those who anticipate doing more than 60% of their projects green by 2018 is 37%, 2 times the growth. So we certainly see that green is growing globally. And when we look at the 13 countries for which we had a large enough sample of respondents to be statistically significant, we can see that growth is pretty much universal. It's not even. More established countries like the U.S. have relatively high growth, in Germany, but where we really see dramatic growth is in a lot of the developing countries. I want to call your attention to Brazil in the upper row and to Saudi Arabia and China in the lower row. Even though several of these countries will not have as high of a level of green building as some of the more established countries, you can see that the rate of growth is quite striking. But really, it is pretty much universal that most of the participants from different countries anticipate doing a lot more green work, having a lot more intensity of green work than they currently have now. So where are they expecting to do this type of green work? The main sector globally where most of the people said that they anticipate doing green projects in the next 3 years is in the commercial sector. That was the largest at 46%. However, new institutional and existing building and retrofit, those two sectors are also expecting to see a healthy amount of green building in general globally. When it comes to what has driven green buildings up till now, what are the key drivers that will increase their growth? We see environmental regulations up significantly from the 2012 study, from 23% to 35%. Now, some of that may have to do with the fact that we do have new countries in the study that we never had before, but when you look at the areas where environmental regulations are the most influential, which include the UK, Singapore, those two were already part of the previous study. So, there appears to be a general trend towards increase in environmental regulations. Since 2012, we've noticed that the right thing to do has declined as the primary reason why people are doing green, and real business value has become the major factor. And we'll get into a few more details because exactly how this plays out differs from market to market. So I'll get into more details on this when we get to the regional section. But this was a trend we first noted between the 2009 and the 2012 study, and we certainly have seen the current study support it. In addition to that, we asked about the main social and environmental reasons that people are building green right now. And the top social reason by far globally is that it encourages sustainable business practices, with 68% reporting that this is the case. When it comes to environmental drivers, interestingly, there is a bit of unanimity to a degree. Every single country, all of the 13 for whom we had a large enough statistical sample, reported reducing energy consumption as the top environmental driver for them building green. It was selected by the highest percentage as influential. However, as we'll see when we get to the regional reporting, some of it was very, very high. Some of it, some countries are like the U.S., for example, are absolutely more focused on energy consumption than any other factor. In others, there are other factors that are even equal to energy consumption in terms of their importance. When it comes to the other two, reducing water consumption and protecting natural resources, while they scored high globally, in general, when we get to the individual markets, we'll see some markets put a great deal of emphasis on these and some do not. And then finally, barriers to green. What is preventing people from investing more in green? Now, since 2008, higher first costs have always been the top barrier, and this still is in the 2015 study. However, when you look at the actual percentage who consider this a serious barrier, you can see that while it remained consistently high between 2008 and 2012, it dropped dramatically in 2015. So we believe that the greater availability of green building products, the increasing number of skilled practitioners who do green work out there is having a positive impact on this factor. Now, I do want to spend a little time with this slide because we are not going to be looking back on this when we get into the regional data, and that is because when we look at the benefits of green building, both for doing new green building and green retrofits, what we found is that for the most part, they are largely consistent from country to country. There is some minor variation, but really the overall picture is very much that there is general agreement globally about the benefits that people can achieve and the degree of benefits people are achieving from green building. What's even more interesting is that these numbers have also remained either pretty consistent or in some cases have jumped up a bit from 2012. And remember, 2012, 75% of the respondents were from a green building council. In this study, only 25% were. So even though we no longer have a sample that is more biased to find green benefits, we still see the same level of benefits reported. It was a real, it's a real validation of these numbers. So what do we see in 2015? We see that for new green building and green retrofits in combination, decreased operating costs over 1 year are 9%. We see that decreased operating costs over 5 years are 14% for new green buildings and 13% for green retrofits. And then we get to the really interesting one, which is where owners say how much asset value increase they see when they invest in making a building green. Back in 2012 for new green buildings, that was 5%. It did a notable increase up to 7%. Imagine 7% return when you actually go to sell that building. And then when it comes to green retrofits, it's even more striking, from 4 to 7, almost double. Now, this is enormously important because in sectors where perhaps they don't have time to get to the payback periods you see below, in sectors where buildings tend to change hands every 5 years, including certain commercial sectors, high-rise residential, knowing that they can get back their investments, if not in the operating costs, then in the sale of the building, is incredibly valuable. And I do want to point out that, again, the payback times did stay consistent, but an average of 8 years and in 2012. And I do have a few findings in addition to those averages that I want to highlight, which is that while we saw an average of the average figures for asset value increase, 24%, almost a quarter of owners and developers expect a 10% or more increase in value over non-green buildings. So that's a significant portion of the market that thinks they're really seeing increased asset value in their buildings. And when it comes to payback, remember that 5 years is often a key number, and nearly half of the respondents actually did identify that they saw paybacks on their green building investments in 5 years or less. All right, so those are our top-line findings. Those are the big summary results. But now I want to take a look, a deeper dive into where the priorities are, what the activity levels are for a few green markets. And again, we're going to look at the Americas, which will be the U.S., Mexico, Brazil, and Colombia. We're going to look at Europe, where the 3 countries we'll focus on will be the UK, Germany, and Poland. And we're going to look at China, Singapore, and India. And in fact, it's a big percentage, but it doesn't cover all of the 13 countries that we found. This was just a nice, quick way of doing this, but if any of you have a particular interest in the Middle East and North Africa or in Australia, please feel free to go to analyticstore.construction.com and download any of these individual reports or the main report. The main report does include all of this information, and the individual reports just include the information on those markets as a quick, easy reference. And I did forget to mention when I was on that original SMR slide, all of our data is available for free download. So when you go to analyticstore.construction.com, any of those topics that I mentioned at the beginning, they're all available to you for free download. So first we're going to look at construction market activity across those regions that I mentioned. So first, when we're looking at the Americas, we can see that steady growth is expected. The yellow refers to, in the bars, refers to those who are expecting to do 60% to 30% green projects, either doing them now in 2015 or expecting to do them in 2018. The light green refers to those doing 31 to 60% green projects now or expecting to do that level in 2018. And the dark green refers to those doing more than 60% green projects. The red boxes up above them are the difference in the totals of the 2 columns. So we can see that overall, it's Colombia that's really seeing the big leap forward, based on the red boxes. But it is still notable that in most of the other markets, especially in the U.S. and Mexico, the major growth in green is coming in those who are really doing most of their projects green, who are doing more than 60% green projects. In Brazil as well. That is where the key growth is in these markets, and we'll see that as a recurring pattern globally. Only in Colombia is there a big lift in the lower level as well, which is why for that market we see such an extraordinary level of growth. So what kind of buildings are they doing? Well, you can see immediately from looking at this chart that there's a lot of different emphasis in each country. So I do want to explain this chart because you're going to see this version again and again in this presentation. So I want to be very clear. So the vertical colored bars represent the totals for each country. The line across them, the little horizontal black line across them, is where the global average is for each of these categories. So for instance, for new commercial construction, it's around 45%. So you can see that that's where the line cuts across, and you can see who is above and below the global average. So we can understand not only how they compare to each other, but where really some markets are exceeding the global average in terms of their expected levels of work, in terms of their interest in other areas when we get to other parts of this. So when we look at this, we can see that in the U.S. it's pretty evenly split between new commercial construction, new institutional construction, and retrofit. There's pretty much a high level of activity expected in all three. In institutional and retrofits, they slightly exceed the global average. When it comes to Mexico, though, it's clear that new commercial construction is dominant, although they do also exceed global averages in terms of retrofits of green buildings. New commercial construction is also dominant in Colombia, but in Colombia it's new high-rise residential that is the one other market that really appears to be a strong green market in that area. And then when it comes to Brazil, we see that they're pretty close to the global average on commercial, well below the global average on institutional. In fact, all the countries in the Americas other than the U.S. are significantly below the rest of the global averages in institutional construction. But Mexico really does put a big emphasis on retrofits in existing buildings as well. All right, so that's the Americas. Let's look at the level of activity in Europe. Now you can see that our study findings indicated that the UK was the area with the greatest overall growth in the number of green projects, although Germany saw an increase both in the percentage of those doing more than 60% green projects and in those in the 31% level, whereas for Poland and the UK, pretty much most of the growth is coming in that dark green category, more than those who are really doing a high level of green. And where are they expecting to be doing it? Germany's results really resemble the US's. They're pretty evenly distributed between new commercial construction, new institutional construction, and retrofits. In Poland, we see, again, an emphasis on commercial construction. And in fact, Poland not only has a very high percentage doing new commercial construction, but they also have a percentage that significantly exceeds the global average when it comes to commercial interiors. In the UK, the emphasis is very different. They're actually lower on new commercial construction and just about average for new institutional construction, but where they're seeing the emphasis in their market is in retrofit, which isn't that surprising in the UK, but also in new low-rise residential, big push on green in that sector. When it comes to China, India, and Singapore, we can see that China is the country with the greatest overall growth at 18%. And here, more than in any of the other regions, it's really that the huge leaps in those dark green columns at the top of the 2018 bars that are really making the difference. There is a strong expectation in China, in India, and in Singapore of really transforming their markets and really transforming the way they do work and doing a high level of green within that 3-year period. Now, I do want to just pause here at this last version of the slide I'm going to give and say that these are not necessarily predictive. If we go back in 3 years, we may not see things at this level, but it does indicate the degree of expectation of commitment in the market. And that in and of itself is very meaningful when you're trying to gauge where green building is in that market. All right, so what kind of buildings are they doing? You can see that overall, just compared to the other two sets of data that you've already seen, you can see that for the most part, there is a high level of activity in a lot of different sectors in China, India, and Singapore compared to the Americas or Europe. Certainly, there's huge activity in terms of most people expect they're going to be doing new commercial construction. In addition to that, in Singapore in particular, but also China slightly, are above global average for new institutional construction. Institutional construction, however, is not very important in India. And retrofits are not important in India and China, but they're enormously important in Singapore. In fact, that's the single biggest category. We do see very, very strong numbers that far exceed global averages in terms of high-rise residential construction growth there. That's clearly a target market for green, not particularly surprising, but still it's good to see the study reaffirm what we know is going on. And with green communities, it's particularly interesting. Green communities seem to matter in this region of the world more than globally, with such a huge excess above the global average. This is really where a lot of that core activity is expected in the next few years. All right, so that's the markets. Now let's look at why they're building green. And first we're going to look at the social reasons for building green. And when it comes to the Americas, the top social reasons by far are encouraging sustainable business practices. Even in Mexico, where that's below the global average a little bit, you can see it still far exceeds other top social reasons in this region for building green. So for all four of these countries, encouraging sustainable business practice is critical. In the U.S., there's very little attention paid to worker productivity compared to the rest of the Americas. Mexico, in particular, places a huge emphasis on that as a top social reason for building green. And Colombia is slightly above average in the importance of creating a sense of community. When it comes to Europe, it's a completely different picture. No, encouraging sustainable business practices is no longer the top except for in the UK, where it completely dominates, similar to the US results. But in Germany and Poland, encouraging sustainable business practices is actually significantly below the global average. In Germany, what really seems to move the needle is increasing worker productivity. That is a key focus, a key social reason for building green in Germany. And as of right now in Poland, there really isn't one strong social reason. The study results are kind of distributed rather weakly across all of these, suggesting that there's no one strong social motivator in that country. When it comes to China, India, and Singapore, again, we see a strong emphasis on encouraging sustainable business practices, especially in Singapore. But we do see other things slightly more important. Singapore also has a strong emphasis on increasing worker productivity. China, and especially India, place a strong emphasis on creating a sense of community. In fact, India's score was well above the score of any other country on this factor, that so many regarded this as an important social reason to build green, suggests that the India market is fundamentally different from a lot of the other countries we studied in terms of what's really motivating things there. And I do want to point out that how high above the average for supporting the domestic economy. Singapore is, with India not far behind. So that sense of the larger business community benefiting, sort of sense of community, they're supporting the domestic economy, larger benefits to the country in general rather than business benefits really seem to play out here, even though encouraging sustainable business practices is also very important. All right, so those were the social reasons for building green. Now I want to look at the environmental reasons they say they're building green. Now, as I mentioned in the beginning, reducing energy consumption is by far the top one for most of the countries, and you're going to see this over and over again. It certainly is quite dominant in the Americas, and the U.S. in particular had one of the most striking gaps between reducing energy consumption and any other environmental reason to build green. Right now, the U.S. is more focused on that than in anything else, although the U.S. does exceed the global average in terms of the interest in reducing water consumption. We can see, though, that the other countries in America, Mexico, Brazil, and Colombia, place a high emphasis on protecting natural resources. And while there were a few developed countries that fell into this as well, in general, we found that countries where the GDP was largely made up, had a large percentage devoted to the extraction of natural resources, those also tended to be countries where really the importance of protecting natural resources tended to really be far more dominant. We can see that water is of particular importance in Brazil, and that lowering greenhouse gas emissions, the U.S. is slightly below average on that. Brazil is way below average on that. That just is not moving the needle in Brazil. It does have some influence in Mexico and some influence in Colombia, but really lowering greenhouse gas emissions is not as big of a driver as other factors in the Americas. When it comes to Europe, we do still see that incredible importance placed on reducing energy consumption, especially in Germany and Poland, where it far, again, exceeds any other factor. Similar to the U.S., this seems to be the mark of countries that have been doing green for a little while. We do see an unusual emphasis for a developed country in the U.K. on protecting natural resources. One of the most striking things here is actually that none of these three European countries place much emphasis on reducing water consumption at all. They're way below the global average on that, and I found that a bit surprising. I was also surprised that Germany and Poland finished so low on lowering greenhouse gas emissions, and that might be just because that is so built into their regulations. It's no longer a driver for green building, but certainly in the UK we see it as much more important. Finally, China, India, and Singapore. When it comes to the environmental reasons for building green, you can see in Singapore, reducing energy consumption is incredibly important, and again, far exceeds any other measure. However, when you look at India, you can see that there isn't that big of a gap between reducing energy consumption and protecting natural resources. And in China, those two factors are tied. So you can see that while reducing energy consumption is still very, very important in these markets, other factors actually are equal, and you'll want to bear that in mind when you're looking to build in these markets, where to put your emphasis. There is also, there's still not that much emphasis on reducing water consumption, with India and Singapore right at the global average. Lowering greenhouse gas emissions, Singapore is a bit above the global average on that, but one of the most interesting ones is two countries that are famous for their poor air quality. China and India have a great deal of attention, far more than the global average, on improving indoor air quality. There is general notice on indoor air quality in general, and one of the thought leaders we had participate in this study, who worked in China for many years, anecdotally confirmed that in China, this is something that is very much top of mind, and does suggest that when we see that push for healthier buildings that we see growing on the horizon, these might be regions where that could be particularly well received. All right, so those were the reasons people have been building green so far. That was what's driven their current levels of green activity. Next, we're going to look at the triggers and obstacles for increasing their green building. And in the Americas, you can see that in the U.S., client demand is by far the biggest, and they're way above the global average on that. But right thing to do, environmental regulations, and even market demands and lower operating costs, all still relatively important in the U.S. There was a lot of triggers for future green building activity. In Mexico, Brazil, and Colombia, client demands are nowhere near as important. They're in fact way below the global average. Brazil is driven most by environmental regulations. And lowering operating costs and doing the right thing and client demands are also somewhat important. When it comes to Mexico, market demands edge out a little bit more important, but there's no one clear trigger. And in Colombia, there clearly is no huge trigger either, no one trigger that really dominates the market. In Europe, you can see that in the UK, there are certain triggers that are just given a lot of emphasis. Client demands, environmental regulations, and market demands far exceed. This is really what's driving the UK market in a very, very strong way. And we see no other strong patterns amongst Germany and Poland. Again, client demands are most important in Poland, but they're in fact below the global average in terms of those that consider this a highly important factor. And Poland is below the global average on everything except for lower operating costs, and even that is one of its highest at just 27%. So the triggers are pretty diffuse in Germany and Poland. When it comes to China, India, and Singapore, we can see that here client demand is definitely not what's driving the market the way it was in the Americas and to a lesser degree in Europe. But environmental regulations are key. Doing the right thing also scores pretty well, especially in China. In Singapore, market demands are critically important. And in China, market demands are critically important. And in Singapore, lowering operating costs, very, very important. All right, so we've looked at the triggers. Now let's look at the challenges. What is standing in the way of greater green investment? Now, as I mentioned, higher perceived first costs tend to be at the top globally. But you can see that while it is very important in the U.S., Mexico, and Colombia, it is not very important in Brazil at all. And in fact, lack of public awareness and lack of political support and incentives, which were the biggest obstacles among many developing countries, were the biggest obstacles for Mexico and Brazil. When it comes to Colombia, higher perceived first costs are very important, but so again, that country also exceeds the global average notably, and lack of public awareness and lack of political support and incentives being important. We do find that it's in developed markets where this issue about the perception of green being for high-end projects only is a problem. And certainly the U.S. slightly exceeds that. But it's clear that if you can address the perception of higher perceived first costs in the U.S., that is a clear obstacle still. When it comes to the European countries, we can see that higher perceived first costs are very important in the Germany and the UK, not particularly important in Poland, and really not as important as they were in the US. In fact, in the UK, another significant problem is that perception is that green is for high-end projects only. Poland falls in line with the countries, with Mexico and the South American countries, in their emphasis on lack of public awareness and lack of political support and incentives being key obstacles. And then finally, China, India, and Singapore. You can see that only in China are higher perceived first costs a huge obstacle. And they do exceed by quite a bit, but China actually had pretty high ratings for a lot of obstacles. Lack of public awareness is also very high. Perception that green is for high-end projects only is pretty high. In India, the biggest obstacles are very much in line with what we saw in the South American countries, in Poland. It's that lack of political support, lack of public awareness that are key factors that really are preventing things moving ahead. All right, so that was a total summary by the different factors that are in play. I thought it would be useful as a final summary before we moved on to do a quick overview of what we just saw by region. So in the Americas, we saw that the green market is robust and growing, that the current market is more robust in North America. Dramatic growth is expected in South America, especially among those doing more than 60% of their projects green. And the sectors with the highest expected future green activity vary by country. In the U.S., it's institutional and retrofits, although commercial is also very important there. Mexico and Colombia, though, commercial dominates. And in Brazil, it's commercial, retrofit, and high-rise residential that are important and expected to grow. The worker productivity is a key social reason for building green in Mexico, Brazil, and Colombia, but less in the U.S. Energy is the top environmental reason for building green, especially in the U.S., but protecting natural resources is also important in Mexico, Brazil, and Colombia. And water conservation is very, very important in Brazil. And client demand is the single most important trigger for future green building in the U.S., but no single trigger dominates the other three countries. So that's sort of our snapshot of the U.S. market. Snapshot of Europe is that a green market is expecting to shift to greater green intensity with a lot more growth in those doing more than 60% of their projects green. Again, the sectors vary. Germany is pretty much on par with global averages, with commercial, institutional, and retrofit activity all at relatively high levels, whereas in Poland, there's just a huge emphasis on commercial. Commercial construction is really driving green in that market right now. And in the UK, we see a lot of green retrofit and low-rise residential activity expected in the next few years. Social reasons really, again, vary. Productivity is important in Germany as a driver for green. Poland, not really seeing a single important driver emerging. And in the UK, it's encouraging sustainable business practices very similar to the US. Water consumption, very low priority in Europe. But lowering greenhouse gas emissions is a priority in the UK. And client demands, environmental regulations, and market demands are all critical triggers for more green buildings in the UK. Finally, in China, India, and Singapore, we see that the green market is shifting to greater green intensity, even more so than in Europe. All three of these countries are above global averages in commercial construction, high-rise residential, and green communities. And supporting the domestic economy is really important to driving green in this part of the world, although creating a sense of community is critically important in India. And supporting sustainable business practices is really important in Singapore. Now, we see in Singapore a real emphasis on reducing energy, but better air quality and preserving natural resources are the most important priorities in India and China, nearly equal to energy in those markets. And regulations are more important triggers for green buildings than client demands in all three countries, and the challenges vary by countries, by each country. Higher perceived first cost is the biggest challenge in China. Lack of public awareness, big issue in India, and the perception that green is for high-end only is a problem in Singapore. Okay, I just want to take a quick 5 minutes to touch upon the findings from our corporate sustainability report that we partnered on with Siemens. We conducted the research in 2015, and it's actually the fourth report in a series of studies that was done every 3 years. And the reason it's relevant to this particular webinar is that we are focused on the largest companies in corporate America. We had 150 respondents, and 56% of them reported annual revenues of $1 billion or more. So this is really what is driving green globally, is a lot of what these companies are doing. And 60% of the respondents to this study were C-level executives. So we asked them since the beginning, when we first launched this study in 2009, to rank their company's level of sustainability on a 5-stage spectrum. And, really, stage 4 and 5 are green companies. Stage 2 and 3 are pretty low on the spectrum. Stage 3 is you recognize some value in sustainability, but you're not really fully green. Now, the reason we titled the report that Sustainability Reaches Middle Age is this, where they put themselves largely in this. Because while we see significant growth over the 2012 study in those who place themselves in stage 4, a big leap from 32 to 41%, so we do see an overall growth in the number of companies that can be flagged as green. We also start to see some retrenchment in stage 1 and even a tiny bit of retrenchment. It's pretty even, but still, in stage 2, up till now we've seen notable declines in both of those. And we see at bare minimum a leveling off that is actually not statistically significant, but still slight percentage increases. And we see fewer companies saying, wow, we're super transformational when it comes to green. So, like I said, though, overall we see a growth in the number of companies that you can identify as green. And what's driving that? What's driving that is definitely that most of them recognize that green investments create reductions in operational costs. But we start seeing some very different answers when we compare the responses of companies in stages 1 through 3 to those who flag themselves in stages 4 to 5 in terms of the benefits that can be achieved from sustainability, including attracting and retaining employees, lowering and creating a competitive advantage. And in fact, those who really, rank themselves as 4 or 5, I just want to point out 61% believe that their sustainability investments increase their company's financial performance. Those who do not believe in the bottom line benefits of sustainability do not recognize that benefit at all. And that is a fundamental difference that we think is driving what is now becoming a bit of a green gap. You've got the companies who get it and are making those investments and the companies who don't. And if we want to see people moving to the other side of that line, a key factor seems to be recognizing enough to make the investment in a person or team dedicated to sustainability. Among just C-suite respondents now, this is just that 56% of respondents who were, 60% of respondents who were in the C-suite. Those who have actually made those investments now understand the benefits that they're achieving much better than those who haven't. Now, there's two ways to look at this, of course. You could say the reason they've made those investments in the first place is because they recognize those benefits. But you could also say that lowering that those who get the insights from those people are also recognizing that. And with that, that ends my presentation. And thank you very much for your attention to it.